To introduce myself, I'm Katie Toth, and I'm a wealth advisor here at Fulcrum Financial Group. And I'm here with Sarah, our founder.
Hi, yes, I'm Sarah Carlson, and proud to be part of this team here at Fulcrum Financial Group. So, can we spend a few minutes just talking about the importance of retirement planning?
Yes, I would love that. Let's do it.
So, I have a theory: if you don't know where you're going, you're going to end up somewhere else. Retirement planning is like that. Too many people take more time and effort to plan a dream vacation than they do their own retirement. And yet, if you think about it, most people, when they retire, they live another 30, 40 years. And without an understanding of how they're going to spend their time, what kind of lifestyle they're going to have, what kind of resources to help support that lifestyle, people can be in for a big surprise. So, what are things that you think our viewers should do to plan for their own retirement?
Yeah, I'm so glad you asked that. I like to say early and often. That relates to making sure that you're trying to achieve a minimum investment of about 15% of your income, and absolutely making sure that you don't leave money on the table with your employer. If there's an employer match, make sure that you are at a minimum contributing the amount to get that match.
Yeah, that's an important point. I also like people to focus saving 15% for non-retirement. So if you need a new car, a down payment for a house, your children's education, you're not rating your long-term money for your short-term money problems. That's really important. And that's probably one of the number one challenges and problems I've seen over my 30-year career.
Sarah, that is such a fantastic point, so that you can be your own bank. Really, ideally, if there are expenses that you can pay out of your own savings versus taking on debt with really high interest, that's what we like to see for our clients.
Exactly. So let's touch upon different types of retirement accounts and some of the opportunities. Long time ago, it used to be all pensions and defined benefits, and instead they went to a defined contribution plan where the employer would put money aside and as an encouragement to the individual to save for those future goals as well. And so the most simple type of one is the individual retirement account. A lot of times the acronym is IRA. Katie, can you go over the overview on how an IRA and a Roth IRA works?
Yeah, absolutely. So, in addition to your employer retirement, you have some options outside of that. And Sarah mentioned we call it an individual retirement account. There are two kinds. One is traditional, and what that means is that you invest, your investment grows tax deferred, and then in retirement, when you take distributions, when you draw income, that's when you pay taxes. And so there's a powerful opportunity for tax deferred growth. And then a Roth IRA refers to a kind of retirement account where you choose to pay taxes up front. You don't get a tax deduction, but your investment grows tax free. And actually, when you take it out at distribution as income, it's not taxed.
Let's kind of go through some simple math. An individual to earn $100 and put it in their pocket, after taxes and everything else, they end up with roughly $75. But if they save it towards retirement, they would get the full $100 could go into the IRA or the Roth. Let's touch upon the popular employer plans quickly. One of them is the 401k. Traditionally, an employee puts money aside, and many times an employer will do a match based off of a formula. So that same example $100 putting into savings, and then if the employer matches $25 of that $100, the individual has 125 in their retirement account versus $75 in their pocket. 401ks also recently have Roth options. So let's talk about what employees usually can contribute into a 401k, because it's up to 100% of their income up to a certain annual limit. When you're over age 50, it's important, it's an opportunity to save more for retirement. Number one, you have a shorter time period between when you would want to have financial independence. And usually some of major purchases like a house is behind you. And it's nice that there's higher limits that you can contribute on a tax favored basis to 401k and an IRA. What would you add to someone that's over age 50, Katie?
If you have not already, by age 50, it's a really good time to connect with a professional who can do some planning and some projections for you so that you've got a nice runway between your present and what you're hoping your retirement will look like, so that you're not 2 years from retirement and haven't done some planning that could be really potentially pivotal for your trajectory.
Right, because ultimately, as you accumulate funds, that bundle of investments is going to be what can determine the income stream that you can create off of it. Let's talk about some different strategies as you go into retirement. One of the important things to understand what income streams may exist. So let's talk about those. Probably the most popular one is Social Security. I have found that too many people start Social Security benefits without finding out the particulars of the opportunities for them. So many times people take it early at age 62 when you're first eligible, but you end up locking into a lower benefit level, about 70% of what your full Social Security would be. So your full Social Security is dictated off of the year that you're born. So Social Security is an income stream. People have options off of their partner's benefits. But the most important thing about Social Security is the cost of living indexing that takes place with it. Full retirement, the latest you can take it is 70 and a half. That would give you a benefit of 130% of your full benefit. But the most important thing of Social Security is that cost of living, that it will go up each year. And then another thing I've seen people, you can turn your own money into a pool of money into an income stream. Either through a bond ladder, creating a portfolio of fixed income, or annuities. Annuities you can have, that's where an insurance company will give you a guaranteed income stream. And it's important to understand the rules and what you're choosing and what you're committing to. So working with a professional is advantageous.
In the case of Social Security, some delayed gratification can really pay off. And one of the really important pieces with Social Security and with pension opportunities that you might have is really making sure that your wishes for your partner are a part of the option that you choose. So if there are those spousal benefits, that you're opting into them and that they're at the percentage benefit that you would want them to be at.
Yep, that is so important. So understanding what kind of income would coming in while you were alive, as well as if you or your partner, either one of you were to pass, how does that affect the household income? So you're absolutely right.